Okay, we are going live. Hey, what is up, everyone? Welcome to the channel. My name is Brent. I'm going to go ahead and give it a few seconds here in order to have YouTube connect. Looks like we have good connection. We're going live here. So, hey, welcome to the channel, everyone. My name is Brent. In today's video, we're going to go ahead and cover the M1 Finance dividend portfolio. I don't go live very often, but here we are. If you guys are joining in at any time, definitely let me know in the comment section or the chat system if you have any comments or questions. I'm going to go ahead and go through the process of the normal weekly progress that we've made. I didn't have a video last week, but we're going to go ahead and cover the four main indexes this week. We'll go over the entire S&P 500 performance for this 1 week. Then we'll go ahead and dive into the M1 Finance Roth IRA portfolio. Take a look at the overall performance of the portfolio overall, however long it's been active. Then we'll take a look at the current top three, the worst three. Then we're going to go ahead and go over into the 1 week performance, what stocks were up, what stocks were down, what was the overall week performance, what stocks paid out dividends, and then we're going to go ahead and update our dividend chart. From there, we'll go ahead and dive into what stocks we're planning on buying. I haven't been watching the market this week and last week, so I have a little bit of equity. In addition, I believe maybe 2 weeks ago, I hadn't bought any stocks, so I know markets were pretty positive this week. So we're going to be taking a look at the portfolio and making a decision as to where we should invest our money here on Monday. So I'm just doing a little bit of a live stream here, trying to do more live streams, not only on this channel, but on my other channel as I do a little bit more streaming. So with that said, if you guys are brand new here, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. Okay, so we're gonna go ahead and start off by taking a look at the overall markets this week. So actually, we'll go ahead and cover the markets here in just a second. Let's go ahead and dive over into the M1 Finance portfolio, and we'll take a look at the overall performance right now. As it is in the portfolio, the return isn't at the highest. So at the highest point within this portfolio, it was roughly at 77.7% return. So right now we're almost at those all-time highs. But as far as a value-wise, the portfolio is currently sitting at an all-time high as far as portfolio value. Plus we have a cash balance of $470.13 sitting on the sidelines. And that's what I want to go ahead and get invested this upcoming Monday. So overall, I think that this portfolio is doing really well when compared, to other portfolios that I've seen. This one actually in itself, I feel is done really well just because it's mainly just dividend stocks. It's not heavy growers. It's not filled with the Teslas, the Apples. It has Apple in there, but it doesn't have Facebook, the FANG stocks. So it still had a really good growth despite being mainly all dividend stocks. So if you guys are joining me here in the chat system, definitely say hello. Let me know if you have any questions or any of that. But overall, our top three winners for the current performance has been Apple up 289%, Lowe's at 166%, and Main Street Capital at 144%. So I'm really happy with Main Street Capital. That's a monthly paying BDC, so business development company. Really nice, long-term, great company. And then down towards the bottom, our worst performers have continued to be Colgate, Hormel Food, and Clorox. So all these, these three down here towards the bottom, they're kind of thorns at the moment, having recently been added into the portfolio here in 2021. But I do believe that they're solid business names. They have solid products, they have solid services, and distributions and such. So I believe long-term wise, while they may be kind of beat up here in the short term, we'll definitely have that growth or upside potential here in the future. So right now, I'm just kind of adding to these, kind of getting them to a position where I feel, during this downtrend will be beneficial to them. And then when they do make a recovery, like Hormel Foods, I kind of discussed their earnings over the past few times that we've had videos, and I don't see any issues with Hormel Foods as far as their quarterly earnings per share or their revenue matching. Their in-year guidance has remained pretty strong as far as where they're planning on hitting. So as far as Hormel Foods, I believe that they're still really good trajectory. So that is the overall of the portfolio. Let's go ahead and jump over into the 1 week. So 1 week wise, we put on a 1.78% gain. $670 of market gains, and $12.51 of straight dividends. So that's pretty good. Now, really quickly, in comparison to the other indexes, if we're looking at the S&P 500 here, the S&P 500 put on a 1.64% gain in that same time frame. So we were just in line with the S&P 500. The Dow Jones put on a 1.08, so we beat out the Dow Jones. We're more in line with the S&P this week versus the other indexes. And then we have the NASDAQ right here, up a whopping 1.29. NASDAQ did have a bit of a pullback. End of day Friday, I watched that. Midday had a big pullback, tried to recover, but then kind of trended sideways. I was watching the markets a bit on Friday. All the green isn't really exciting to me because the market, market goes green and you're not going to sell anything. You're not going to buy anything when it's just green. You're just kind of watching it versus when it's red, you're looking for opportunity. You're looking for that bounce at the 50-day mark, 50-day moving average, those 200-day moving average, just the market. You're looking for, more red to buy in at those times versus when it's green, you're just letting it roll and looking for opportunity. So here on Friday, kind of watched it, see what it would do. It fell down pretty hard, bounced, and kind of kept going. I feel like Monday it may pick up. It may dip early in the morning. Stock futures right now don't matter. It's Saturday when I'm recording this, or here we are live. So it's not going to make too much of a difference what happens on Monday. But overall, our portfolio came in line with the other main indexes and actually just beat out just a little tad right there, up 1.78%. Now, of that 1.78%, a lot of those gains came from IIPR. This is the Industrial Innovative Properties. This is a real estate investment trust. We have Digital Realty Trust, another REIT. Walmart, that's a big move for Walmart. In a single week, Walmart is up 5.54%. That may be due to earnings. So again, I wasn't really paying too much attention this week as far as what the market was doing. And I know it's big right now on earnings, but these are long-term investments for the long term. So just kind of whatever they do in the short term, that's what they're going to do. But they're good positions long term to hold. So really nice there. Good growth on Walmart. Fell into the top 3. As far as our worst performers this week, we have Cisco down 4.31. Hormel Foods down 1.52, and ABM Industries down 1.37. So a couple, our 3 main negatives in the portfolio, Colgate, Hormel, and Clorox, continue during this week of pretty positive outlook here in the market. Really green across the board, all index over 1%. These 3 companies here were pretty beat up, or in the red, I suppose. They're not really beat up, but they are a bit more beat up than normal. I think Hormel Foods had actually done pretty well, not this week, but last week. I think they had came off their bottom. They no longer had that downtrend movement within Hormel Foods. So that is the 1 week there as far as the market move and our 3 best and 3 worst performers. As far as the activity goes, companies that paid out dividends, I didn't make a video last week. So last week was the 11th through the 15th. So here we have Cardinal Health paying out. Let's go ahead and bust out our handy dandy calculator. Cardinal Health paid out $10.33. Essex Property Trust paid out $8.65. Innovative IPR paid out $15.65. Main Street, that monthly BDC, paid out $8.34. Realty Income is a monthly REIT, paid out $3.06. WP Carey is another, this is a quarterly REIT, paid out $15.10. And then we had Cisco paying out $16.16. So within the last 2 weeks, the portfolio generated $67.29. And then we deposited 2 times, $201.42. So that gives us that grand total that we're going to be investing this week here, which is, it should be, let's go ahead and just do the math real quick, 201.42, $470.13. And then we didn't make any buys. We didn't make any buys last week. The last time that we made any buys was back on the 11th, and that was not this Monday, but the Monday prior, where we had purchased Hormel Food. So Hormel Food here, we bought that at $41.86. If I look at Hormel Food right now and take a look at the price, let's go ahead and move the price in here. Price is at 42. 6.01. So it's slightly higher versus where we had purchased it last time. And if I zoom in here into the last 3 months, we can see that it did hit some bottoms. It had a higher, bottoming out point right here. It's continuing to move higher. Had a bit of a pullback, but it got some more support here at that 40, a little bit below $42 mark. And now we're kind of bouncing upwards. So we may see a little bit of wiggle room within Hormel Foods here in the short term, but I think it'll kind of quickly overcome what it's kind of going through. And I'm just going to use this opportunity to kind of load up on Hormel Food below my cost basis. And that allows me to lower my unit costs for Hormel Foods, increase my yield on costs, and also increase my dividends in Hormel Food, which is pretty nice. So I do plan on continuing to buy Hormel Foods. Even it has moved slightly higher versus the last time I purchased it, it is still lower versus my initial cost basis when investing into Hormel Foods. Let's go ahead and jump over into my holdings, and we'll go ahead and take a look at the portfolio's current dividend income. So this would be the M1 Finance portfolio, and I'm going to go ahead and take a look at Hormel Foods. I should own roughly 25.51 shares. So when I go ahead and do a quick look up here, I actually own 36.09. So I got to update my tracker. I could do this quickly by clicking there. And we have 3609. So 3609. And my cost per share went from 37.12 to that may not be right. Let me go ahead and jump back over here. Hormel Foods. Oh, 47.12 is my right now. 47.12 to 45.57. So that's a bit of a dip right there. I lowered my cost basis by nearly $2 within Hormel Food right there. So I'm going to go ahead and update my holding. So this should be very close to the current value of the portfolio. So 38,961, 38,959. So just slightly off. And that's because of those fractional shares. So currently our portfolio annual income now sits at roughly $1,086 for the M1 Finance portfolio. And this has been pretty active since January of 2018. So January 8th, 2018, we started up this portfolio from absolutely zero. We started adding into it. Initially, we added, our initial investment. Then every week we set a schedule where we would deposit capital into the portfolio and allowed us to dollar cost average on a weekly basis throughout the whole 52 weeks within a year. And we've continued to do that from 2018, 19, 20, and now here in 2021. We're continuing to max out the Roth IRA every single year, regardless of what the market is doing at the time. So that is the M1 Finance Roth IRA portfolio, overall performance, weekly performance, and the current dividend income. Now, I did kind of talk about buying up some Hormel Food, but there, we have $470 in there, and I have 3 positions that are negative. But Clorox and Colgate, I believe my initial investment in these, so I put 16 into Colgate. So let's go look at Colgate real quick. I always kind of forget on a monthly basis. I got to write these things down, my notes as far as why I'm not buying more of them. So we're going to go ahead and throw in Colgate in here, and we'll take a look at the price, the 50-day, 200-day moving average. And we can see here that the price is below both 50-day, 200-day moving average. So it looks like it may be kind of getting some support at this level at Colgate. We can see here in the short term, it broke below, $75 and kind of bounced. So anytime it broke below $75, it would quickly bounce up and then move higher, then fall back down, bounce below 75 and kind of pick back up. So Colgate may be finding some sort of bottoming out at this period. If it can break above its 50-day moving average, close above it, we may see a lot more upside potential for Colgate. If I have no issue buying this one here in the short term, I could just kind of add into it. So it's showing some recovery moves with Colgate in itself. Clorox here, I don't know. This one still looks like it has weakness. it hasn't really bounced, similar to this one. When I look at both of these, I regardless of which one I'm looking at here, I guess I have to look at one at a time here. This one really doesn't have much strength, showing that it is getting close to the 50-day moving average. It could, I don't know, I have to look at the earnings here upcoming when it goes on earnings, but those earnings could kind of decide whether it will make a recovery play or just continue to downtrend, or just kind of trend sideways for a bit. So I'll have to continue monitoring those. I feel better investing in Hormel Foods at the moment versus Colgate and Clorox. Clorox, I believe, I already have that one capped out at 2,000. That's kind of where I wanted to kind of cap it out at. Where is it at? Clorox. Yeah. So it's down roughly $250. If I add that to the current value, that would put it at $2,000. So I'm not going to add anything in the Clorox at this moment, but I'm going to go ahead and split it 50-50 between Hormel Foods and Colgate right now. And I'm going to go ahead and just do that. So bust out, once again, my handy dandy calculator. And if you guys are tuning in here, definitely let me know. Just let me know in the chat system here saying hello. If you have any questions, I don't go live stream very often here on the channel, but I'm trying to do it more often here as well. So I'm going to go ahead and copy this. And I'm going to go ahead, select Hormel Foods, go into buy and sell. Paste that right in there, and we have, I'm going to go ahead and make this 07, and then I'll have 06 go into the other one here, which is Colgate. So jump in and taking a look at Colgate, click back, and go into Colgate, Palmolive, hit buy and sell, and go ahead and paste that. Continue, confirm, and now we've gone ahead and updated our buys. I believe Colgate and let's see here, Hormel Food. Hormel Food. Wait, what's today's date? Today is the 23rd of October. So Hormel Food actually went ex-dividend on the 15th. So anything that I add into it right now is after the ex-dividend date. The ex-dividend won't go active again until January, right around the 15th of January. So anything I kind of add into it at the moment, just kind of buying at these lows, and I won't go through any ex-dividend here in the short term. But Colgate, ticker symbol CL, is going ex-dividend on the 20th, which again, it's the 23rd right now. So that's not going to benefit me at all. It's already past the 20th. So again, that's not going to go ex-dividend up until January of 2022. So that is the overall performance of the M1 Finance portfolio. So if you guys are watching this on the non-live, let me know down in the comment section below, what are your current plans for November? We have 1 week left in October, and then we're going to go ahead and go into the final descent here of 2021, where it can get pretty crazy here in November and in December with, everything that's kind of going on and all that fun stuff. So let me know what you're buying. If you're planning on selling anything, right now we're sitting near all-time highs. So the market really can go either way. It can be positive or negative. So that is going to be it. As far as my plans outside of M1 Finance, if you guys are tuning in, I did sell. I didn't mean to sell, right? So I did sell my SPY. I had 300 shares that I had sold a call option on. I sold 3 call options on SPY and at 447. So here's my call option at 447. Last week had an exceptional week all across the indexes. Not this week, but last week was up crazy, like 2%. Didn't expect it. Had a call option at 447. So all my 300 shares of SPY were sold at 447, which was still profitable. I think my cost basis on SPY at the time had been at 444. These are kind of recent buys here, those 5 shares. So I'm not down. I think I'm still up slightly on these positions. But my other ones, I did make a little bit on those. And on Monday, depending on what the market does, I would like it to pull back in the morning on Monday. I'm going to be looking for a pullback on Monday. And then I'm going to be doing a put option on Friday 3 put options on the 29th. So I'm going to go in here and take a look here for the 29th, which is up. And I'm going to be looking right around 447, 446, and buying up some puts right around this area here. So I won't make a whole lot of premium if I buy it at 447. If I buy back my own shares at 447, I think we may have some, some wiggle room here in the future. So if I buy back my shares, I'll put out a put at 0.8, and I sell 3 of these calls, I'll make $240 in premium. And then if the market does have a bit of a pullback to 447, then I will buy those 300 shares back at my cost basis of 447, plus collect a premium of $240. If it doesn't fall back to 447 this upcoming Friday, that is fine. I think, usually November, December, the markets kind of simmer or go flat, but we have running inflation going on right now, so I'm not sure what will actually happen here in this environment. So I'm still going to be putting in 3 put options there right around 447, 446, depending on what the market does here on Monday. If it does pull back, that means the premium, the market will pull back, causing these premiums here closer to the cost of the market. If this pulls back to say 450, the premiums on 447 will be higher, 446 will be higher. So I'll look for that opportunity in the early morning when the premium, if the market does pull back, and try and get a higher premium. But that's my current sort of goal for Monday. So that is going to be it for this video. Let me know in the comment section below if you guys have any comments or questions. If you guys tuned in here into the live stream, thank you guys for tuning in. And that is going to be it from me. If you guys are brand new here, once again, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue. And I will see you guys in the next video. Bye-bye. Thanks for tuning in.